Hi everyone. Welcome back to AI Finance Buddy. Today, we're diving into a market that's sending mixed signals. Tech stocks are thriving, with Nutanix, NTNX, soaring over 13% after a strong earnings report, while some consumer goods companies are facing challenges. What's driving this shift, and how should you respond? In this episode, we'll break down today's biggest market trends, explore the top stock movers, and discuss how inflation and interest rates are shaping investor sentiment. Plus, we'll share an inspiring success story of Pete Adonai, who achieved financial independence by saving over 50% of his income and investing wisely. And before we wrap up, I'll give you a sneak peek into my personal investment strategy, the real trades I'm making today. So stick around until the end to get all the insights you need to navigate this ever-changing market landscape. Let's get started. Chapter 1, Today's Market News. Today, the market sentiment is mixed, with tech stocks showing resilience while some consumer goods companies face headwinds. The technology sector is buoyed by strong earnings reports, particularly from companies like Nutanix, NTNX, and NVIDIA, which are driving investor optimism. However, concerns over inflation and interest rates continue to loom, influencing investor behavior across various sectors. Overall, earnings reports are the main focus, shaping market movements as investors assess future growth potential. Now, let's look at the top 3 biggest stock movers. First, Nutanix, a leader in cloud computing, saw its shares soar over 13% today after reporting impressive revenue growth and a bullish outlook. Despite narrowly missing earnings estimates, the company's strong demand for its subscription services and a significant increase in annual recurring revenue caught investors' attention. Think of it as a bakery that not only sells bread but also has a growing line of delicious pastries that everyone wants. By score, 85 out of 100. Next, Pure Storage, PSTG, known for its innovative data storage solutions, beat earnings expectations but saw its stock drop by 10%. The decline came after the company's revenue forecast for the next fiscal year fell short of Wall Street's expectations. It's like a restaurant that serves a fantastic meal but disappoints diners with a limited dessert menu. Investors are cautious as they weigh the strong current performance against a less than stellar outlook. By score, 60 out of 100. Finally, Hormel Foods, HRL, famous for its meat and food products, reported better than expected revenue but missed on earnings, leading to a 3% drop in its stock. The company's solid revenue growth reflects strong demand, but the earnings miss is a reminder that even well-established brands can face challenges. Imagine a popular food truck that runs out of its best-selling dish. Customers love it, but they want more. By score, 75 out of 100. Today's market activity suggests that while tech stocks are thriving, consumer goods companies are navigating a tougher landscape. Investors should keep an eye on upcoming earnings reports, particularly from major players in the tech sector, as these will provide further insights into market trends. As always, staying informed and adaptable is key to navigating the ever-changing market landscape. Chapter 2, Simple Finance Terms Explained. Insider trading is when someone buys or sells stocks based on secret information that the public doesn't know, and it's illegal. Think of it like peeking at the answers before a big test, totally unfair. A ticker symbol is a short code, like Apple for Apple, that helps you quickly identify a stock on the market. It's like a nickname for a company, making it easier to call them out in a crowd. The price-to-earnings ratio compares a stock's price to how much money the company makes each year, helping you figure out if it's a good deal. Imagine you're shopping for a car. The P/E ratio is like comparing the price of the car to how much gas it saves you, helps you see if it's worth the investment. Chapter 3, Top Stock Pick of the Day. Today, let's talk about why Jazz Pharmaceuticals, JAZZ, could be a smart investment choice. Jazz is a biopharmaceutical company that focuses on creating innovative treatments for serious health issues. Here are some key points that make Jazz stand out. First, Jazz has a very low debt level, meaning it doesn't rely much on borrowing money. This is a good sign for stability. Second, its price-to-earnings ratio shows that the stock is reasonably priced based on its earnings, which is a positive indicator for investors. Third, Jazz is great at generating cash, with a high free cash flow yield. This means it has plenty of cash to invest back into the business or return to shareholders. Finally, the company has a strong current ratio, which means it can easily cover its short-term obligations. Overall, Jazz looks like it has good potential for growth in the next year or so. However, keep in mind that investing in the biopharmaceutical sector can come with risks. Changes in regulations, competition from other companies, or shifts in healthcare policies could impact Jazz's performance. Always do your research and consider these factors before investing. Chapter 4, Core Long-Term Strategy with ETF. Imagine you want to invest in a whole garden of flowers, but you only have a small budget. Exchange-traded funds, or ETFs, are like a bouquet that lets you buy a variety of flowers all at once. They're important for long-term investing because they offer a simple way to spread your money across many companies, reducing risk. Now, think of the MSCI World Index as a global map of the best flower gardens around the world. It includes companies from 23 developed countries, helping you invest in a diverse range of industries. By using the MSCI World, you can enjoy the beauty of global investing without needing to pick each flower yourself. Today, there's some important news about the MSCI World Index, which is like a big basket of stocks from companies around the world. MSCI is making some changes, called rebalancing, that will take effect after the stock market closes today. This means that about $1 billion will flow into certain stocks, like IndusInd Bank, Zomato, and Hyundai Motor India. Think of it like rearranging furniture in a room to make it look better and work better for you. This rebalancing helps keep the index up to date with the best performing companies. If you're looking to invest or just want to keep an eye on the market, this is a good time to pay attention to how these changes might affect stock prices. Remember, investing has risks, think long-term and don't use urgent funds. Chapter 5, Quick Financial Lesson. Building confidence in selecting individual stocks takes time and practice, just like learning to ride a bike. Imagine you're a beginner cyclist. At first, you might wobble and feel unsure, but with each ride, you gain balance and confidence. The same goes for investing in stocks. Start by researching companies you know and use. For example, if you love a particular coffee shop, look into its stock. Read about its business model, earnings, and future plans. This familiarity helps you feel more connected and informed. As you learn, consider starting small. Invest a little in a few companies that interest you. Track their performance and see how your choices play out. Over time, you'll notice patterns and develop your own investing style. Remember, even experienced investors make mistakes. The key is to learn from them and keep going. Here's a tip: set aside a specific time each week to read financial news or watch educational videos. This will help you build knowledge and confidence in your stock picking journey. Chapter 6, Real Stories of Financial Success. In the early 2000s, Pete Adonay, known as Mr. Money Mustache, was a software engineer living in Longmont, Colorado. By embracing a frugal lifestyle and saving over 50% of his income, he embarked on a remarkable journey toward financial independence. Over just a decade, he invested wisely in low-cost index funds and ETFs, focusing on the S&P 500, which allowed his wealth to grow exponentially. By the time he retired at 30, Pete had amassed a net worth of over $1 million, proving that with discipline and smart investing, financial freedom is achievable. His story teaches us the power of living below our means and the importance of investing early. So, remember, it's not about how much you earn, but how much you save and invest that truly counts. Start today, and you too can pave your path to financial independence. Chapter 7, Summary and Personal Investment Strategy. Thank you for joining us today. Let's quickly recap what we covered in each chapter. In Chapter 1, we explored a mixed market sentiment, with tech stocks like Nutanix, NTNX, thriving on strong earnings, while consumer goods companies like Hormel Foods, HRL, face challenges. Keeping an eye on upcoming earnings reports will be crucial for investors. In Chapter 2, we defined key terms like insider trading, which is illegal stock trading based on confidential information, and ticker symbols, the shorthand for stocks. We also discussed the PE ratio, a helpful tool for assessing stock value. In Chapter 3, we highlighted Jazz Pharmaceuticals, JAZZ, a biopharmaceutical company with strong financial health and cash generation. While it shows great potential, remember to consider the risks associated with the sector before investing. In Chapter 4, we discussed how ETFs allow you to diversify your investments easily, like a bouquet of flowers. The MSCI World Index is a great way to invest globally, and recent rebalancing will impact stock prices, so stay informed. In Chapter 5, we talked about building confidence in stock selection. Start small, research companies you know, and track your investments. Remember, learning from mistakes is part of the journey. In Chapter 6, we shared the inspiring story of Pete Adonay, who achieved financial independence through frugality and smart investing. His journey reminds us that saving and investing wisely is key to financial freedom. For today, I am adding $15 to my MSCI World Index investment and experimenting with $10 in a fractional share of our suggested best buy pick, Jazz Pharmaceuticals, JAZZ, both with 1-to-1 leverage to demonstrate the importance of cautious and diversified investing. Before we wrap up, let's bust a common financial myth: a high salary automatically means financial security. In reality, wealth is more about how much you save and invest. Remember, smart money management is what truly counts. Take a few minutes today to research how inflation affects the stock market and your personal savings. Share your thoughts in the comments. Small steps lead to big financial success. As we conclude, remember to do your own research, test strategies, and consult a financial advisor before making decisions. If you enjoyed today's video, please like, comment, subscribe, and turn on notifications to stay informed and support our channel's growth. Join us for the next episode, where we'll build on your financial knowledge. We'd love to hear your thoughts, questions, or topic suggestions in the comments. Thank you for watching, and remember to enable notifications so you never miss valuable insights and market updates.